Markets are back in the red. That's after a 2-day reprieve. Investors weighing concerns about the health of the economy and also the reversal of the Magnificent Seven trade. Meta, the last of the group to turn negative on the year now. Joining us now is Sébastien Page, Rowe Price, head of Global Multi-Asset and Chief Investment Officer. Sébastien, great to see you as always.
Likewise.
So we had the NVIDIA event today, Sébastien. It's their big event, GTC. Investors didn't seem really too impressed. I mean, the stock finished down more than 3%. And we had an NVIDIA analyst on, and we were asked about that stock reaction response. And he said, in part, this is just what he characterized as the mega AI trade and trend going, I think he used the word soft, right? If that AI trade has gone soft and it stays soft, can this market work?
I call it the tyranny of high expectations. Mm-hmm. Expectations were just so high for these stocks going into this. My colleague says we should stop calling it the Mag 7, but call it the Lag 7. Mm-hmm. You know, they're down 18, 20% in aggregate. I think the market can do okay if it broadens, but it won't be exceptional returns for the next 6 to 12 months without
how would you quantify that? What is not exceptional? What would that mean?
Say mid-single digit returns for the next 6 to 12 months. From where we are, we've had a bit of a correction here. I think the word of the day, the word that you hear everywhere in the media, and I'm going to ask you how many times you mentioned it today, is uncertainty. But there is more than just the tariff headlines. Growth is softening. You see it in the economic surprise index for the US. We got into this with very high expectations, very high valuations. And then, yes, uncertainty. I asked State Street to run some data for me. They're able to see how many times a word is mentioned in the media by week, and they can go back 10 years. I had this feeling last week that everyone was saying uncertainty, uncertainty, uncertainty. By the way, we're boosting that number right now by mentioning it in the media. But
notice, you're the one saying it. We haven't said it in this conversation, at least.
Point taken. The last week was the highest frequency of the word in their media pool, which is a global media pool for the last 10 years, and that includes COVID. So it's the word of it's an unsatisfying word, because what it means is we don't know, we don't have a lot of insights, but we need to broaden this. Growth is slowing. I don't think we're headed to a recession, but the retail sales data that came out yesterday and the one before, not so hot.
So I want to go back to another word of the day, which is the broadening word that you mentioned as well. And I was looking at the ratio of the S&P equal weight to the S&P 500. And so basically when this line goes down, it means a narrowing of the market. When it goes up, it means we're broadening again. We're in a little bit of a broadening trend, but there have been several other attempts at that broadening that haven't quite made it there because the Mag 7, because mega cap tech, or the Lag 7, whatever you want to call it, has been so dominant.
Yeah, look, Julie, for 10 years. For 10 years.
Is that going to change at all?
I think we might have reached, for quite a while, peak market concentration. You see European markets do well right now. You see, value stocks do quite well, and we're long value stocks in our asset allocation portfolios. So for a value trap to become something else than a value trap, right? By the way, I still think the US tech will dominate over time in the long run. But when you want to invest in a value bet, you have to have some momentum behind it, which we have right now, for example, with European and value stocks, and you have to have fundamentals justifying the momentum. With European stocks, you have real fiscal stimulus coming. It's been a long time coming. With value stocks, you have accelerating earnings relative to growth stocks. So you have a value proposition, cheaper assets. You have the momentum year to date, and you have some fundamentals behind it. That's the trade we're making for the next 6 to 12 months.
The international value trade.
International value in particular, yeah.
I want to go back to something you said, Sébastien, because you said US economic growth, you expect that to slow, not recession. But if you do expect it to slow, what does that mean for earnings revisions?
It's coming down, and that's part of the picture. It's still very high. Again, the tyranny of high expectations. We're still looking at aggregate expectations, consensus of 10 to 12% for this calendar year. That's a high bar to clear. And so Yes, it will have impact on earnings. But look, I'm not super bearish on markets right now. I think don't count the US consumer out. Wages are growing around 4%. Inflation's growing at about 3% if you look at the last 12 months. That means that, for the high-end consumers at least, you have wages growing faster than inflation. Unemployment is still low by historical standards. Just by the way, 4.1% compares quite favorably with 5.7%, which is the long-run average for unemployment in the US. So there is still a consumer here in the US to sustain some level of growth, maybe a bit slower, but some level of growth.
You're coming out with a book in about a month or so, called The Psychology of Leadership. And I know in that, but I want to talk to you about the book, but as it relates to investing, right?
Yeah.
Because I know you talk about core beliefs
Yeah.
in the book. What are some of the core beliefs of investing? And then how does that play out sort of in your day-to-day as you're making your decisions?
See, I love that question because core beliefs simply indicate how you view the world. These are your assumptions, your main assumptions to interpret events. Well, investors have been conditioned on the trend is your friend. That's a core belief in investing, and it's been the right core belief for 10 years. And we've kind of forgotten another core belief in investing, which is buy low, sell high. Valuations matter. And when I look at this, I think we might be close to a tipping point where valuations, at least for a while, reassert themselves in the world of investing. And we have maybe a bit of a regime shift here.
How does that then play out in the market? What is that regime shift? Is it just about rotation? Is it about the declines that we're seeing? What does it look like?
I think it speaks to a broadening of the markets over time, to the value of portfolio diversification, which has been kind of hard to defend for a while. US large cap tech has eaten the world. Everything else has done worse compared to it. But also the return of what some have called the law of gravity in financial markets. The fact that you have a positive interest rate, right? We had this long period with zero interest rates or negative interest rates after inflation. So that is all part of that regime shift. And examining your core beliefs. How do you look at markets every day? Do you think the trend is your friend? Do you think valuations matter? Understanding your core beliefs and managing your portfolio accordingly is, I think, going to matter more than usual because of that shift.
Sébastien, always good to see you. Thank
Likewise.
you so much. Appreciate it.
Thank you.